Hi, everyone. Welcome to another edition of All Access, and coming to you on a lovely, bright New York City afternoon. And I want to talk to you about all the exciting things that are happening in crypto. There is, as usual, no shortage of craziness and no shortage of excitement in the crypto space. So, where do we start? I think we should start with some basics. First of all, every now and then, I kind of go, there's a lot of activity on the price side. The noise does get to me. It's not something that I pay much attention to, but it does percolate up. And when it does, I go and check what's happening, and I'll talk about what I think is happening. But it's good to sort of regroup. It's good to sort of examine your basic assumptions about the world. Just laying everything on the table. Is it the case that we are making forward progress on the crypto vision, or is it just simply essentially a trader's game, and that's being traded and it gets bid up, then it goes down, which it does do, without any underlying improvement in our lifestyle, without any underlying improvement in terms of technology? So that's something that every now and then, every scientifically minded person should stop and consider. This is a game of making assumptions. It's a game like life is generally, and then taking action based on those assumptions. So we need to check if our assumptions are have been invalidated by changing conditions. Every time I do this, every time I look around, and I do live in Manhattan, I'm surrounded by financial corporations. Every time I go and interact with that system in any capacity, whether it's something as simple as sending a wire, whether it's something as simple as making a bill payment, whether it's something much more complicated like a partnership with one of these entities and taking a look at their source code. And I have been to the 42nd floor of a certain building, and those of you who know that let's just say the Vampire Squid building. And, and I've actually looked at their code very, very intensely. And it's every single time, it's a given that I step back and say, okay, there's so much, we can do so much better, that this infrastructure is not on par with the infrastructure I see anywhere else in life. So that's maybe not true. What it's not on par with is it's not on par with the typical stuff that we're used to in the tech world. So those of you with a tech background, the kinds of systems we are capable of building. The kinds of systems that you deal with. And then when you look at financial infrastructure, it's a very different universe. Some of it is run on COBOL, which you already knew. So it's a dead language from 1970s. And it's very hard to find programmers for it. They get handsomely paid because it's so hard to find talent in that space. But it's not that. It's just the way it works, the architecture of these systems, the fact that they require trust, the fact that they rely on trust, the fact that they have to be audited, the fact that they are so prone to mismanagement, to malfeasance from the inside. All of those make them a poor fit for today's society. We can do better. So blockchains will eat the world. They will eat money. They will eat assets. Everything that you know as an asset will one day be something on a blockchain. Your car obviously is a digital asset. Obviously, if the engine block did authentication, no one would be able to hotwire your car. So it's a simple thing. And even today, it's kind of barely done right. And I've been thinking about this since 1980s. How long has it been? 40 plus years. And the authentication was always happening inside the little key part, right? It was happening with a metal authenticator. And it really should have been electronic. And my high school self could see this. And it took 40 years for it to happen. We're going to see the same transformation in the financial space. When you and I and everybody with 3 brain cells can look and say, look, this clearly is a more efficient way to reconcile books. It's a more transparent way to run your company. It's an indispensable way to encode into the fabric of our financial system those rules that we cannot do away with. If we can look and see this, then everybody else will at some point be able to do the same thing. So that's exactly the game. And that game has played itself out. And those of you who've been around, you've seen it. The internet was around in the 60s. It was around in the 70s. I first logged into BitNet in the 80s. Then, of course, the internet, started becoming available easily to regular civilians and so on, and the regular people without companies. So I ended up spending a lot of time with the internet protocols, and then suddenly, with certain applications, it caught on like wildfire. So that's going to be, I predict, the adoption curve for any technology, but especially this technology. So our goal now is to remain resolute in our vision, at least mine is, and every now and then I do this reassessment, and every single time I come away convinced much more strongly that this is inevitable, and the steps towards this are happening, and I want to talk to you about those. Not sure if I'll get to talk about everything today, but I'll mention just glimpses here and there of people making headway towards converting assets into digital format, of being able to trade and move assets anywhere in the world. And we're doing a lot of fun things. Spent the last week with some new products that we're building, with one essential new product I'm super excited about that I cannot wait to tell you about. So that's going to happen hopefully in the next few weeks. So there's so much fun stuff happening, and it's wonderful to be sitting here surrounded by people who do things the old way, and they need to be audited. They need to have people come in and check their work every now and then, and of course every 6 months those people who do the checking, the regulators, the inspectors, find something wrong, and every 5 years there's some major scandal. So that's sort of what they are used to. And I know we can do so much better, because we are doing so much better already, and we are already doing even better in the lab, in the pipeline. So it's an exciting time. I'm always excited when this happens. Now the prices, they will go up and down. They go up and down, especially with the changing macro conditions. So as I'm sure everybody has heard, the US Fed is taking steps to take money out of circulation. They're increasing interest rates. And that, of course, causes asset prices for many assets to go down. And that's sort of natural. They did this. It's a funny thing. If the world anticipates that it will happen, it prices it in. That pricing in happens ahead of the announcements. The announcements are typically episodes where people check the previous assumptions against what got announced. And if there's a delta, either positive or negative, then there's a slight, either uptick or a downtick after that. But it's a small adjustment at that point. So that's sort of what happens in this universe. That's what's happening. Now, of course, crypto took a beating. It's okay. Will crypto be here in 10 years? Yes. Are the central bankers going to be here in full force the way they have been in 10 years? I'm not so sure. So that's the kind of world I'm looking at. And we will do everything to make it happen. And in fact, we don't have to work that hard to make it happen, because things have changed. There has been a sea change, at least from my perspective, where in the past, we would have to go and proselytize. I had to go and talk to a whole lot of politicos. I'm one of the few people who briefed a hell of a lot of them. In the old days, we would have to go to companies and tell them about what they could do, and then they would do a half-hearted proof of concept, never deploy it, etc. The tech wasn't right. But now the tech has changed, and the mode of interaction that I'm seeing has changed. People come to us. And I'm in this funny position of having to turn down the various people, the various projects. So, and we can talk about how we do this. It's essentially, we're so swamped with what we're doing that I only want to do the signature projects just to illustrate to the world how things are done, and let other people take over from there. There is so much to do and so much money to be made in burgeoning ecosystems that it's really exciting, and no one entity can get to them. And in fact, it's not desirable for a single entity to go capture all of that upside anyway. So come and work on us, come build stuff on top of us. And there's so much fun to be had, and so many cool things to build. So that's all what's happening. I should say a few things in addition. So, as these prices go up and down, people get worried about solvency of various funds, various entities, and so on. Ava Labs has followed, I would say, technologically a very aggressive strategy, and financially a very conservative strategy. So we build things. We build things that nobody else has ever thought to build before. Whether that's the platform, whether that's the bridge, whether that's any of the myriad things we've got in the pipeline. So we are doing things that other people didn't know how to do. They talk about it a lot. They come up with a gazillion names for a gazillion different things, but they just don't know how to do these things properly. And we are, I think, the one of the best teams in crypto by far in terms of innovation, in terms of delivering things. So that's very aggressive. And on the other side, I can't take all that much risk in every aspect of my life, and no one should. So when it comes to our treasury management, we're very conservative. So we had zero funds with any of the entities that recently had liquidity troubles. Ava Labs has a runway that's so long that when we do projections, kind of look at what's happening, like we expand out the projections only so long, and we're solvent through many years to come. So I'll be here. I know my team will be here. We've changed nothing in our hiring plans. We're hiring at an insane clip. If you want to work with a great team, and if you want to work on the cutting edge of blockchains with the best technology, then please apply. We have a number of roles that we're currently hiring for at any given time, and you come check it out. And we would love to work with people who are energetic, brilliant, and fun to work with. So that said, everything I think from my perspective looks fine. I love bear markets. It's a good time to separate out the wheat from the chaff. The projects that were attracting money with unsupportable claims from those that actually bring something new to the space. So that's sort of how I see this. I don't really care how long the bear market lasts. I don't think it can last all that long, because it seems like the things that the Fed is doing are those that are about to bring on a recession. In fact, technically, I think we are in a recession. As of 2 days ago, we had 2 consecutive quarters of negative growth. So that's not my forte. We may or may not be. Don't nitpick what I just said. But we're headed towards negative growth in terms of the economy. And when that happens, you can't just tighten. You do have to change your monetary policy, and that's it's going to have to change and flip. So, but it doesn't matter. It's not what's going to get us to the moon and back. What will get us to the moon and back is actually doing exciting things with this technology, and that's really what we're doing in the background. What is this? Parts of the slide didn't load. Try reloading. How does this happen? This is pretty crazy. Let's try this again. What does it mean to have parts of the slide not load? Bizarre. Let's try this. Processing request. It's amazing that this is a hard task. Okay, here we go. All right, today is June 17th. And 6 years ago today, there was a big event. There was something called the DAO hack. Somebody stole 3.6 million Ether. They could have stolen 3 times as much. They could have stolen about 10 million Ether. And I forget how much of the Ether that is, of some total Ether that is, but it was a large percentage of Ether could have been stolen because everybody stuck it into this one smart contract. That smart contract was really complicated and it was buggy. And so the numbers back then were, of course, a lot lower because ETH was in its early days. ETH was only a few years old. So that corresponded to the following scenario. So there was this thing called the DAO, and it was engineered to support a decentralized venture capital fund. And there are some really exciting things around this. There's around the story of how it garnered that much money. Everybody with ETH ended up putting some money into it. Lots and lots of influential Ethereans who never seem to have any qualms and worries about conflicts of interest. They didn't then and they don't now. But everybody who was anybody in ETH had some coins in this thing. And the idea is it's kind of like a VC fund. Someone comes before the DAO and says, hey, I'd like to do a project. Let's take a simple one. I'd like to print some T-shirts and sell them. I have a history of doing this and that, and I've sourced these shorts. It's going to cost $5 to manufacture, $15 to sell. I want to borrow $10,000, and I'll bring back 30,000, something like that. And if the DAO token holders like this, then they could fund it. That was the idea. And of course, many of the ideas, the expectation was that the projects that go before the DAO would be those that are serving the community of the burgeoning community of smart contract builders. But there were also some other fascinating suggestions at the time as well that I should mention. One of them was the fact that this was a decentralized organization, and it could do things that no real organization could do. So you could, if you wanted to, and had the creds, and you could show them, go before the DAO and say, hey, I need $3 million to build a submarine from Colombia to Florida to carry drugs. And obviously, if you go in front of A16Z, Andreessen Horowitz, one of the best VC firms, and you say that, they will laugh at you. Nobody can legally fund such a thing. But the DAO can do this, and it's kind of interesting. So anyhow, there was like a lot to capture one's imagination here. And at the end of the day, it was a funding platform. So, it would have funded projects that wanted to do things. And there's a very complicated token scheme. But they also got so clever that they built in additional requirements and steps into the process that didn't need to be built into it. In particular, getting your money out of the DAO was like a 32-step process with a huge delay. You had to wait for 28 days, plus 7, plus 14, something like that. You had to create a child DAO where you would be the king of that DAO, and then from there you would propose, and then you'd vote with all your coins on your proposal, and then finally get your money out. It was really, really hard to do. In any case, but people didn't really look into the code at all, right? So most people don't know how to read code. They just go by trying to read social situations. They check for noise on Twitter. That's the reason why we're in the situation that we're in crypto, with a lot of ridiculous projects garnering attention because people just ape. So everyone aped into the DAO before aping was a thing, and it set records. And so they did a big raise. They validated the power of decentralization. They captured everyone's imagination, mine too. It's pretty cool stuff. And the token was listed on major exchanges. And then the bug happened. So the smart contracts controlling the DAO's wallet had multiple vulnerabilities. We called out a bunch of these. I called out a bunch of these days before any of this happened. So this May 27th, so I guess that's about 20 days before this happened, we wrote this thing. This is a blog post. There's also a corresponding paper. The paper was called A Call for a Temporary Moratorium on the DAO. It's as clear as it could be. We wanted to warn the community that there were serious issues in how the DAO worked. The central goal of anything like this is to capture the true sentiment in a population. Right? We want to build a bike rack. Do you guys support it? Do you not? Want to build a nuclear power plant? Do you support it? Do you not? And it's a little tough, it turns out. This is a theory. There's a whole lot of theory called decision theory that expands upon that exact problem. How do you actually find out what people's true intentions are? It's not as easy as it sounds. You can just ask people, but it gets a little complicated and dicey, especially when the people voting are also the people who are benefiting from the results of the vote, and especially when the things being voted upon can be combined in complicated ways. What do you think about a nuclear power plant combined with a bike rack that you can use right next to your house? All of a sudden, things get pretty complex, and eliciting people's true intent becomes really, really difficult. So, and of course, there's all the usual slew of problems with smart contracts, right? You got to have the math right. You got to make sure that the game theory is correct. In particular, you can have drive-by voting. People come in, they vote on an issue. Yeah, I want, I buy a bunch of tokens. I vote to have a nuclear power plant in, let's say, New Haven, Connecticut. I don't live there, And in fact, then I sell all my tokens, right? It's a DAO for New Haven, the Connecticut people. So I just screwed them over just because I wanted to screw them over, and I didn't have to bear the consequences of any of my bad actions. And then there's bias. A lot of these voting efforts are biased by people who are who are positive expected values, plus EV. So if you are positive expected value, I think that this is going to be the best thing on earth, and I'm exuberant. I'm irrationally exuberant. You know, the drilling in the East River. It's a great idea. Let's drill. I think we're going to find great things in there. And if there are other people out there who are neutral or who are negative, it's easy for them to get drowned out. The blog post explains all of the nuances of how this process works. And if you have negative expectations and you vote, then you get trapped into with the DAO structure. What they did for the first problem I mentioned, which is you don't want drive-by voting. Well, then they trap you. So you vote and you get trapped for the duration of that of the consequences of that vote. So what could happen is so you think drilling in the East River is a terrible idea. You know, it sounds like a terrible idea to me. You're gonna run into a tunnel or something. So so if you think that and you vote against it, but there are enough crazy people to vote for it, now you're stuck and you have to bear through with the drilling if they are more numerous than you are. So that's one problem. And so what are you going to do about it? Well, you're not going to vote until the end, right? And so then there is this very funny way of voting. People don't vote early. I would not want to reveal. I wouldn't, if I think something's a bad idea, I would want to vote at the last minute. And so a lot of the voting would end up getting pushed towards the end of the voting period. And so on and so forth. There are a gazillion problems like this. You can see that this suddenly creates a very unstable dynamic. I don't vote. A bunch of exuberant people vote. That makes it appear as if a lot of people are pro this idea, and then that gets more pro votes, etc., etc. So you get into very, very bizarre situations with voting systems. And it is a very complicated world, and decision theory doesn't really have nice, simple takeaway results that you can say, oh, hey, this is the world's best voting system. We should use this. The DAO was one good attempt, an honest, well-intentioned attempt at this, but it was replete with errors. So I wrote this paper with Dino Mark and Vlad Zamfir. It was great. We were running against time because the DAO had gotten started on the chain, and we had to push the paper out. And I remember distinctly when I put the paper up on Google Docs, and then it went viral, and we had like hundreds of people. And if those of you who've dealt with Google Docs, when people are viewing Google Docs, I don't know if it still does, but it used to give them an anonymous name like Aardvark, Beaver, Camel, etc., with different letters of the alphabet. So I remember this document that I was editing. It had 6 bugs in it, and I was adding a new bug, one by one by one. I think we ended up calling out 9 different issues. Some of them are fairly fundamental with the DAO, and with hundreds of people looking over my shoulder as I typed in, another problem with the DAO is, and so on. It was really fun, and the call for the temporary moratorium created a debate and discussion, but nothing happened. That is, it got started. It was unstoppable. And then, of course, as predicted, funny things started happening. One thing that happened, for example, was that people put a proposal of the kind, do you believe in God? Okay, so it's not controversial, but it's the kind of thing that elicits a gut reaction. You vote yes or no, you're trapped for at least 14 days, I believe it was. So it's a zero-cost question. But it was a question, I believe, intended to trap the people in the DAO to not leaving the DAO for another 14 days. So these kinds of things started happening, and then on the 17th of June, 6 years ago, the hacker came along. He used a bug involving reentrancy plus one of the bugs that we identified in our paper to create a child DAO with 3.6 million Ether, which I guess in today's terms would be about $3.8 billion. So that's quite the hack from someone's den. And so then there was a whole discussion about what do you do about this? Do you live with it? Is code law? Or do you undo it? And so on and so forth. I'm not going to go through all of this, but it was a big discussion. And if you want to get the full detail, I think the best place to get it from is the book, or one of the books by Matt Leising on the DAO, or the book by Laura Shen on early days of Ethereum. Either way, Matt Leising's book is especially good on the DAO. I highly suggest that one. So let's see. So ultimately, there was a hard fork in Ethereum to undo the hack. I think the outcome that the world can easily see from this is what matters is social consensus. And but there was a minority who disagreed, and Ethereum Classic was born back then. So there was another chain called Ethereum Classic. It captured quite a bit of the value, at least 10%, at least initially. So so there was a lot of reputational fallout for Ethereum and smart contracts. But what doesn't kill you does make you stronger. I think a lot of us learned the power of community. We learned the need for thorough security audits. And we also learned the challenge of coordinating updates in times of panic. So, the idea of crowdsourced escape hatches was born. That's another blog post of mine and Itai Ayal's, Professor Itai Ayal's from, I guess, 6 years ago as well. So those lessons have been passed along to every new generation, and they're kind of important, and we've been living with them. The DAO, of course, is long gone, and it's interesting. It's past now, and we'll see what happens with future bugs and so forth. And in my mind, of course, there's a whole lot of complicated, nuanced considerations when it comes to when it makes sense to undo things. Every major chain out there has had a hard fork where they rolled back some changes. So Bitcoin, for example, had a bug where they minted 4 billion Bitcoins, or maybe more even. Actually, I think far more than 4 billion. It's some trillion number of Bitcoins. So if you know Bitcoin, you know that it has a maximum cap of 21 million. So that shouldn't be happening. And they undid it. They had another bug with a database problem. Again, with help from the miners, they undid those, even though there had been enough blocks that finality had been reached. So the blockchain had been expanded, it had grown, and then they went backwards. So so this happens to a bunch of people, but it should be a rare occasion, right? So blockchains that go backwards on a daily basis, that's not a good thing. So, and you know who I'm talking about. I can't believe that they are keeping up a straight face with that. And in any case, the world is what it is. In a bear market, my strategy is just build and let the bear market do its job, and it will wipe out those without tech. So anyhow, so that's sort of where we are. I love the DAO episode. It was so fun, and in fact, but it was also incredibly stressful. Like living through it, I hated it. But looking back, it was really interesting, and because it forced us to think deeply about what it is that we were trying to build with smart contracts. So okay, so now let's change gears a little bit. Let me get a sip of my tea. I am told that my voice is the same as it always was. I don't hear it as being the same. I think I've injured it again. It's a little hard to talk these days. But in any case, let's move on to different topics. There's so much to discuss and cover. So the cycle of subnets. Let me talk to you about this. So people are somewhat confused about how the revolution will happen. Everyone's here to make it happen. And then what's it going to look like? It's not going to be televised. There's not going to be a big bang. And if you're expecting that there will be some kind of a flag day when, Jamie Dimon comes over and says, to my place, shakes my hand and says, from this day on, everything at JP Morgan shall be on the blockchain, and we're putting, our own stock on the chain with digital form, etc. That won't happen. It just won't happen that way. Now, how is it going to happen? It's not going to start start with any digital asset for which there's a large body of incumbents. It's not going to happen with stocks. Every single person for years expected that the next thing after money was stocks. It was equities. I mean, I was there to tell them back then, 6-7 years ago, that that was wrong. And I'm here to tell you all again that it's not going to happen that way. It's going to start with those assets for which there are no incumbents, the new virtual assets. No wonder NFTs are so vibrant. No wonder the gaming space is so vibrant, because there isn't somebody to displace. You're not taking money away from somebody else's table, moving it onto the blockchain table. So it's just brand new space. That's where it's going to be, where the growth is going to happen first. And after that, and after we've had some number of people play with that new tech in that setting, they will understand the value. It'll be inherent. It'll be inescapable. I know you know, and we all know. Like, if you're watching this podcast, you understand the value. They don't, and you can go show them any number of slides, but they waste their days looking at slides produced by their marketing department and so forth. Anyway, to them it looks like oh yeah, well, not this but that. But the fundamental shift in how business is conducted, how business logic is encoded, it just hasn't happened yet. Look at the educational materials for people building web services. Web 3 isn't quite there yet, and it will be. Once those materials are there, it's going to flip. So we're going towards that future. I, as myself and we as Ava Labs, the Avalanche community, we're funding these efforts to make that happen. So what's going to happen instead? We're going to see games and other things, these virtualized new assets, take over. Well, not take over. They will emerge. They will emerge. And typically, how do they emerge? They emerge in the easiest way possible for the dev to create them. And that typically is they go to an existing chain and they create a new token. That token has certain dynamics. It's associated with a game, etc. And they go play with that. That, when it happens on the Avalanche chain, it will drive up the chain fees for the chain on which these assets were launched. That's typically the C chain drives up the fees. This is entirely normal. And as usage drives up the C chain fees, people come to me and they say, hey, you said the fees were going to be low. What's going on? And well, the same rising fees, when they go from 5 cents to 50 cents, that makes people very upset. Meanwhile, of course, people were paying hundreds of dollars on Ethereum, and certain chains are unusable. People are priced out. Entire nations were priced out of DeFi. Avalanche was a godsend for them. So as these fees go up, then there's an incentive for the high usage applications to move to their own subnets. Subnets are not like L2s. They are more general. You could build an L2 using a subnet, and that's a great fit, but they're actually a layer of abstraction below, and they're simpler. So these subnets have absolutely no performance bottlenecks in common with each other. They need to have no performance bottlenecks in common with each other. That means that your game and my game can coexist side by side. As your game gathers more interest and there's more activity, maybe it gets bogged down, that has no impact whatsoever on my game because it's on a different subnet with different nodes. At the same time, unlike L2s, these subnets are not disparate, one-off, bizarre things. They're part of a coherent whole. They all export the same API and interface. They're part of the same architecture. The L2 vision is to sort of say, we kind of give up on the L1. This is what we're going to do on the L1, and then the rest is for the L2s to determine on their own. The subnet vision is, hey, we're going to give you a general framework, and now you can scale within that framework. And it's easy for a user to flip from one subnet to another. And in fact, because of the uniformity, we understand how to make these things usable and transparent to the users. So there are many other ways in which subnets can offer a far better experience than L2s. Another one is subnets are decentralized. They are born, or they can be. They can be centralized. People can create a decentralized looking thing that is not actually decentralized. We have to do our homework when it comes to interacting with anything, but that includes subnets as well. But L2s are typically centralized affairs. They're born centralized. A lot of the complexity of L2 technology, one of the reasons why it's still not the case that there is a trustless L2. I wanted to show the world, by the way, let me just do an aside. I want to show the world that you can have a subnet plus an L2 together. I went out to find an L2 that's trustless. There isn't one. I went out to get some code for fraud proofs. There isn't anything that works. It's not clear to me that it's feasible. So I know some technologies will someday perhaps be there with the L2 vision that are trustless. But today, if you go to use L2s, there isn't anything that's trustless. Subnets, on the other hand, are born decentralized, and they don't award all MEV on the chain to a single entity, and the complexity of they don't suffer from any of the complexities that made L2s feasible or difficult. So that is to say, when you have a centralized chain, you have to worry about the centralized entity dying on you. That's a real concern. That's a day-to-day concern. At any time, they could rug pull and disappear. That can happen also to subnets, as you can have a subnet failure. But if the subnet is set up properly, it's incredibly unlikely. A subnet with 100 nodes in it is probably very unlikely to die. It's going to be, as strong as Ethereum in its early days. So the kinds of concerns that you have with L2s, you're not going to have with the focus is different, and the things you have to solve on day one for L2s are in my opinion, not in my opinion, in an objective fashion, it hasn't been shown that they can be surmounted within the confines of the L1 the L1s that we have today. So using the L1s, it's not feasible to stick a fraud proof. It's not feasible to solve for the problems that you face when some of the data that's some of the transaction information that's on the L2 is unavailable and so on. So we can go into that whole detail, but bottom line, we're going to be in this cycle of people launching things on Avalanche and then fees going up, and when that happens, they migrate to subnets, and then that will create more validators to launch. Those validators all lock up AVAX and staking, as well as AVAX in liquidity pools. And that makes the C chain cheap again to use because the load has been shifted, and then rinse and repeat forever. And so we did this with, I think, 2 recent game subnets. There are many more subnets in the works. I think last week I walked through a list. I think there were more than 30 projects on that list. And so those are all, that's what's happening on that front. And it's very, very exciting. So we're going to see a whole explosion of subnets from as the pipeline clears out. And I should also mention, we've also had testnet subnets that are really fun. Not all subnets are EVM. Avalanche is not an EVM, just an EVM kind of a network. It supports the EVM, but it also supports the AVM and the PVM. And it supports the Spaces VM, a completely one-off VM. It actually works well with MetaMask because it uses some of the same messaging structures. But it's its own virtual machine for putting up information like NFT data, etc., on a chain. And we also have the WAGMI VM, etc. So there's a lot of exciting things underneath the covers of Avalanche. The traders who trade these things, they just kind of look at the tokens on Binance, and there is a world of difference between the chains that are just promise-only chains, no delivery, and not going to name the names. Every time I name the names, I get hatred. But it's not what I am thinking about are not the ones that most people reflexively think I'm thinking about, okay? So there are so many chains out there, and I want you to think big, that promise and don't deliver, where the vision is like, oh, we're going to do this, that, and the other. But then where's the delivery at? Where do you go when you look for code? It's kind of frustrating where we are. Okay, so that's one thing. What else was on my mind recently? Oh, something that was huge on our minds. When prices change, it puts an immense strain on all smart contract chains. So Bitcoin don't care, that doesn't matter. But Ethereum cares, and Avalanche cares, and other smart contract platforms do care about what happens when prices change. There are lots and lots of people with real hard-earned money tied up in lending platforms. They need to post collateral or their positions are liquidated. So they need to rush to the chain and they need to get a transaction in, especially as prices are falling, to put up more collateral or pay back whatever they loaned out and withdraw their funds. If chains don't have sufficient capacity, then fees spike. Some chains go down and they just kind of lose liveness. And you definitely don't want to be in that situation. That's a terrible, terrible situation. I don't know what the chains do that are both centralized and having liveness issues on a regular basis. And there are such chains. So I think people are losing a shit ton of money, pardon the language, because of these liveness issues that these chains face. And I don't know what they do, but I wouldn't want to be the developer of a chain like that. I think we work incredibly hard to make sure that the Avalanche software is up to par, that it has all the dynamics in it that will balance things out, that we've built in the best of science into the chain so that when these spikes happen, the network will continue to behave well. But you never know. You never know until the day of reckoning comes. And this tweet from Kevin Seknicki points out that all of the Avalanche on-chain performance and reliability metrics have remained incredibly high despite the market turbulence. So we're really proud of this. All the subnets, of course, function incredibly well. They have their own set of hardware, and we're very thankful for this. And we worked fairly hard to make sure that this happens. We put in the best of our knowledge into the system, and we're continuing to change it and add more optimizations to bring down the costs of operating nodes as we move forward. Yeah, this I mentioned before. We're hiring. It's the season to build. We're steadily building up our team across every department. We do have, I think, one of the best teams. I have to say one of the best teams. When I say the best team, if people think I'm too cocky. But, I need you to kind of think it through and look around. There are no other groups at all comparable, I would say, to our rate of delivery and rate of innovation. So, it'll take a while for the world to recognize, which teams are delivering and which teams are talking. This is coming up. There is going to be an Avalanche House in our backyard in Brooklyn. Come by. It's on July 15 to July 16. There's going to be workshops, networking, food, drinks, etc. And this is the Andretti car is going to be there. It's like there's this fast electric vehicle that's spinning around in a loop. It's very, very high tech. I sat in it. I cannot imagine sitting in that thing and going at those speeds. I do like driving, the way I drive. Let's just put it that way. But that car looked crazy, and the steering wheel has like a gazillion buttons as well. So I don't know how those guys actually handle any of that. There are like at least 16 different controls on the steering wheel alone. I don't know how they handle all of that stuff. It's really cool to see. Oh, this was really fun. I was on a Zoom call with Simon Fuller, and it's just, just a couple of years, every now and then I just think back, just a couple of years ago, I was making no money as an academic up in Ithaca, New York, building a lot of fun stuff. And I'm obviously a techie through and through. And so I never thought I'd be on a Zoom call with Simon Fuller, but I was. And it turns out that he's quite innovative and he loves NFTs and wanted to talk tech. And so we talked tech about NFTs, where it's going, how to think about them, and so on. And so now he has a $100 million initiative to fund and support the development of arts and entertainment projects on the Avalanche public blockchain. There's a lot of money going into this. So he's going to be using the Open NFT platform, and so his Now United is the group. So we're excited. This is going to be a big, big thing. It's a big thing for the space. It's a big thing for with mainstream connections. So it's a bear market, so people are probably not going to trade NFTs or whatever. But I think this is one way in which this technology is finding its way into everybody's homes, and I would be so delighted if people interacted with Avalanche without realizing they're interacting with Avalanche. If they could go to a website, they're like, oh, I bought this and that, and they didn't even have the Avalanche branding in there. that would still be an amazing win. And that's exactly the universe that we're trying to build. So, okay, yeah. So, oh, yeah, as part of this, I also ended up seeing Grimes at the Avalanche Summit, and she chose Avalanche for her work. So this is kind of interesting. If I may take a step back for a second, Elon Musk has been shilling Dogecoin. I don't know what I think about Elon. It's changed over time. Sometimes I think, oh, this is great. This guy's really innovative. Other times I think this guy's a showman. He doesn't understand anything he's talking about. So he goes up and down. The only thing, and I'm not in a position where I can judge, right? He apparently wasn't the founder of Tesla. He acts like he was, but he's not. He was just an early investor. Then he became a CEO, but he was not one of the three people who founded it. So with SpaceX, undeniable success. Like, he's been doing amazing things, and at times you go, yeah, I wish I could turn over Amtrak for like 3 days to Elon just so he can bring his special touch. So that I certainly feel. Other times, especially when he touches upon things in my area of expertise, I just go, what the heck? He doesn't really understand. So he likes Doge, and he's been pushing Doge, and I like Doge too. I love Doge, and I love the person who actually started it, Jackson Palmer. Very, very amazing person with a very clear insight into the crypto industry. So it's a bit of a surprise to me, though, that Elon would pump Doge without putting resources into its development, and that's a little strange to me. And promise things around Doge without any intent, it seems, of making those happen. Can Doge take over for those things that you mentioned? I don't know, but maybe it can. I mean, I'm very open-minded here, and I will definitely never ever knock down Doge. But if you're going to say, hey, this thing's going to be good, then you'd better be putting some of your own cycles or money or something into making those things happen. So those haven't happened, and a lot of people have bought and lost money on those things. Grimes, in contrast, has done something very different. She looked around, and she came to the realization that a lot of these chains are terrible for the environment, and she is the kind of person who would never ever touch something that is not good for the environment. So proof of work coins, which include Doge, by the way, right? So Bitcoin, Ethereum, as it is now, Dogecoin, etc. These are all burning enormous sums of energy, and some of that is displacing actual good uses for that energy, and causing fossil fuels to be used. So Grimes came to us, and on a ginormous screen in Barcelona, she couldn't make it. She got COVID. No, we weren't supposed to say that back then. She had COVID. She couldn't travel. She was going to travel to Barcelona for the Avalanche Summit, could not travel, and instead she was beaming in as this giant screen that she's on, and she very eloquently described why she chose Avalanche, and she explicitly cited how Avalanche's low energy use, corresponding to 46 households, 46 households, was one of the key differentiators for her to pick this green platform. Now, compared to that, I think Ethereum is consuming about 1.3 million households of energy even as we speak, and Bitcoin is consuming, I think, 3.8 million households of energy even as we speak. So it was great to hear that from Grimes. Great to see people like AVAX using Avalanche. So there are lots of interesting quotes here. I'm not going to bother you with that, and my voice is going, and time's running out. So let me just kind of wrap up. What's this? This is the listing in Japan. Those of you who know this scene know that the regulatory environment is very different from country to country. In Japan, to be listed, you have to get the okay from a certain ministry within the government. And for 2 years or so, they had a moratorium. They weren't okaying anything. But Avalanche is now up for listing in Japan. It's being listed at various different exchanges, starting with okcoin in Japan. So I get to say the following thing that I always wanted to say: we're big in Japan. So That's kind of good. Let's see, Chainlink integrations. So we're doing a big Chainlink integration where they are building some new infra for us, with us, for and with us, I guess. And the VRF that they have, it's not a cut and paste job. It's specially developed. It's why does it have to be special developed? Because Avalanche is so fast that it can do things that other chains cannot do. And so we're really happy with the way that was structured. So where does that leave us? It leaves us at the end of the hour, probably back to where we started. Bear markets are awesome. They're a time to build. Macro will do its macro things. Funds will come in and go. When a fund ends up losing money on one big bet, whatever, like a stable coin goes down, Luna goes down, or Steth depegs. And people who were very bullish on Ethereum merge and tied up their money in Steth ended up not being able to see that money. So now those people are waiting for not only the merge, but the hard fork after the merge for the money to be unlocked. So there's a lot of stuff that they have to wait for. And so when that happens and they have to put up collateral, well, then they might become insolvent overnight. They might go from huge sums of money, managing huge sums of money, to losing significant amounts of money and getting liquidated. So when they get liquidated, they sell. That creates more selling, and then weaker positions have to fold, etc. And you can have contagion in the financial system. This happens. I think that's definitely something that happened over the last few weeks, over the last maybe 2 months. And amazingly, crypto is so resilient. When this happens, even to the slightest degree in the regular financial system, all sorts of people step in, all sorts of phone calls and personal Rolodexes get rolled out, and all kinds of special treatment gets invoked, and taxpayers end up having to foot the bill. In crypto, we managed to be self-contained, and we managed to deal with an enormous amount of liquidations without any kind of bailout, without any kind of special handling, in a uniform, equitable manner. It does cause the prices to go up and down, and it's healthy. Even though, I say this as somebody, who saw the AVAX price go down significantly. And it happens. It happens because of the risk management practices of funds that come in and out. So I'm so happy to see that a lot of that has worked its way out. And, we'll see what else happens. We'll see what other crazy things the Fed does as we move forward. But I think they have come to the point where they're cutting, and they have now hit the bone. They have now managed to make the U.S. GDP go backwards 2 consecutive quarters in a row. So we'll see what happens from here on out. But I'm super excited about the actual things that actually do matter. The price action, it'll go up, it'll go down. We're part of a bigger economy, and Avalanche from the get-go was designed to be integrated well with that economy, and I'm very, very happy about the technology and its current integrations that are coming through the pipeline. So going forward, as I said, we're dealing with a huge pipeline. My big goal for the summer and the months ahead is to get as many items off of that pipeline out to you, and to talk to you about the new innovation in each and every one of them. We touch these things, I touch these things to the extent that they're intellectually challenging and interesting. And I've been having so much fun, and I can't wait to show you what we have cooking. So that's going to happen in the next few weeks, and I'm really, really excited about that. So I hope that you all are otherwise having fun. I hope that you have a wonderful weekend. I myself am going to be, what do I have planned for this weekend? I'm planning to go to, maybe I should end on this note. So I'm going to a concert. I'm going to a Lumineers concert. Last time I saw the Lumineers, it was in a 200-person club in Toronto. And back then they weren't big at all. And I discovered them through YouTube, and they had like 2,500 likes on some of their songs back then. So one thing that I always took delight in was, obviously I did, a bunch of things like, discover new protocols, invent new things, and so on. But the thing I actually really think that I'm really best at is finding great people. That was always my thing. And I always thought, hey, if I couldn't be a professor, what would I be? Maybe I could do a talent scout. And so I managed to always work with some amazing people and to be surrounded by amazing people. So, I play this game to try to see, the up and coming group, if I can discover the up and coming groups before they're big. So Lumineers was one of my successes. Camp is playing with them. Camp is also a fantastic group. They're very big now, both of them. So I'll be there, and I will enjoy my weekend. I'm hoping you do too. There's so much to build. We're in a great time. It's not that often that we see something like this. Last time I saw this was the internet's big expansionary phase, followed by the big .com crash and the fortunes that were made after the .com crash. There was much more money made afterwards, similar to how the railroads worked as well, and undoubtedly similar to broadcast TV and so forth. So very exciting times. I hope you're going to be involved with it in some capacity or another. And if you want to work at Ava Labs, please get in touch with me or with the HR group. It's hr@avalabs.org. So hope to see you online and elsewhere and on the chain later on. Take care. Have a great weekend.